How to maximize your returns in uncertain times. Again, my name is Don Kaufman. You are watching a TheoTrade presentation. Right up front, we give you a risk disclosure. We're not financial advisors nor a broker dealer. We always kind of put this in the fine print. I spent 15 years of my career at a brokerage firm. Before that, I actually worked for a trading firm. I'll discuss that here momentarily. Copyright disclaimer. This is ours. It's not yours. Again, the reason I like to put this up here, well, a couple of reasons. Number one, if you ever need to get a hold of us, okay, our office is based in North Scottsdale. It's right on Scottsdale Road. And here's obviously the number here in Scottsdale. But the best way and most effective way to get a hold of me personally, we use what we call a general inbox. Just go support@TheoTrade.com. Just put Don in the heading and you'll get through right to me. So support@TheoTrade.com. Put Don in the heading if you ever need to get a hold of me. Yes, I answer emails. We all answer emails here at TheoTrade. It's kind of the lifeblood of what we do. You got trade-related questions and so forth after this evening. I mean, you shouldn't be left to your own devices. With that, well, let's get down to business. People, this is why you're here. Listen, by the end of this webcast, I want you to be able to walk away, okay, with, by the way, just more than knowledge, something tangible, something you can actually wake up and use tomorrow. But what we're going to talk about extensively tonight is maximize your returns in what I'll term uncertain times. And I'll show you why I'm, the terminology of uncertain times. And I think no matter where you guys, are joining us from, I think everybody would agree uncertain times is an understatement over here. But let's go through a couple of the bullets. First of all, why you're here? Well, why your retirement accounts, they're at risk. And they're at risk of massive losses in this current environment. We're going to talk about how to curb those losses and risks immediately, okay? How to maintain upside potential while controlling, obviously, downside risks so you can maximize that upside potential, maximize those returns, and give yourself risk reduction. How imminent risks to your 401k, IRA, and retirement accounts can be managed. So we're going to talk everything I talk about tonight you're going to hear this phrase a lot. It's called hedge, okay? Hedge risk reduction. That's a question that comes up. Hedge, it's not the bush out in front of your house. Hedge is going to be risk reduction, risk reduction. A lot of what we're going to talk about is risk reduction. But what you're going to find out this evening, risk reduction is the means to profitability in uncertain times. So why volatility is equivalent to risk? I mean, volatility is risk. It's just a softer, gentler word, I should say, that Wall Street came up with, but how you can minimize your risk. Obviously, each one of these statements is about risk reduction. We're also going to learn this evening, number 5 over here, is the Atomic Hedge, okay, and how that revolutionary strategy not only can cut your risk, but it's going to leave ample upside opportunity. And the problem with the idea of a hedge, the problem with, hedging, okay, is it usually chops off most of the upside risk. And we're not going to do that. We're going to give you ample upside with risk reduction. That's important. Now, before I get off and rolling, our gift to you. You must stay with me until the end of the webcast. We have a little bit of a gift for you, and I think you guys will appreciate this. We like to do this on these webcasts. Why? Keep you tuned in, turned on, and I'll tell you what, I think you'll love this one. It's $197 value. We're going to give you the RSI Laguerre with fractal energy. We'll explain what it is here momentarily. It's overbought, oversold, okay? It uses what we call a Laguerre time polynomial. It's a big, ugly word with fractal energy confirmation. What does it look like? Okay, looks like an RSI. If you guys are interested in this, and I'll stress again and again, this one is going to be, and people are going to ask this the entire time, I will give you a direct link to this indicator right at the end of the webcast. That's our gift to you. You stay tuned the entire time. We want you to stay tuned. Okay. We will give you the link to this particular RSI Laguerre indicator. If you're interested, again, I can pull this up on any number of stocks. People say, well, what does it look like on Apple? Okay. Look at this. Apple is so in wildly overbought territory. By the way, we also teach you how to use this thing, right? Wildly overbought territory. The fractal energy has run out. Okay, you take a look at something like Amazon. Amazon, interestingly enough, has seen some sell-side activity. Something like Caterpillar, wildly overbought. This is the indicator that we will provide to you again at the end of this webcast. That's our gift to you. I'll give you the link right at the end. All right. Housekeeping. Well, you know what? We do have a couple of housekeeping items to get through. First and foremost, this is a skill set. And what I'm going to talk about, you're going to need to pay some attention during the following course material. Listen, I don't ever give anybody instant coffee, instant tea. You want to learn this business? Well, you're going to have to do that. You're going to have to learn a little bit. And, for those of you, even with experience, okay, in markets, I think you're all going to get something out of this evening. So I strongly suggest shut the door, turn off Skype, chat, whatever else distracting you, right? Anybody on Skype and different chats over there, the WhatsApp, close down Facebook, please don't help them anymore. Put your phone possibly on silent mode. I say if you have kids, kick them out. Grandkids, definitely kick them out. Okay, that's the best part about having grandkids. You can kick them out. You can hand them back. I can't do that. I have 3 very young ones. However, the dog can stay. Yeah, even if he's quiet. Only if he's quiet. He took the time to be here. All right. This stuff, I'm going to tell you, of all the different, courses and so forth, this is the one, okay, that I feel, to me, the most strongly about. And I cannot stress that enough this evening. This is really important, okay? Focus on being here. And I'm going to explain momentarily why this is so important. Listen, I watched order flow for 15 years, all right? That's what brought me here. That's why I am here. First and foremost, I grew up around traders, all right? I had a, uncle, was in a family business, and in the 1970s, he started trading on the floor of the Chicago Board Options Exchange. Very shortly after he started trading on the floor, he was invited into a firm. They gave him a substantial amount of capital, about $300 million. By the way, $300 million back in the 1970s, a huge amount of capital. And they started a trading firm together. That firm was actually called O'Connor & Associates. O'Connor & Associates was eventually purchased by the Swiss bank in 1992, became eventually UBS Warburg, and that's the history and how I kind of grew up around trading. Well, I got involved in the industry a lot later than 1992. I started trading in 98, and I started working, with relatives of mine. And a short time after that, I was actually invited to a startup firm. It was kind of a trading firm / brokerage firm. It was called Thinkorswim. And I stayed with Thinkorswim literally from 2001. Okay. We took Thinkorswim public in 2007, and I was integral in obviously taking it public and an insider to it. We were then purchased by TD Ameritrade I call it getting scooped by TD Ameritrade in 2009, and I stayed from about 2009, 2010. I ran all education all the way through 2015. So I built education at Thinkorswim, helped a lot on the trading application, and more importantly, I had access to the largest retail order flow in the industry. And for those of you that have absolutely no idea what order flow is, it means I had access to everything you did. We watched your trades. We studied your trades. We knew what worked, what didn't. I ran the education division for 7 million clients, okay, for a period of 5 years. And what you learn here tonight, what I learned, okay, it just comes from watching billions and billions of dollars in other mistakes and the knowledge, of course, of what is going to work best, not just for traders, but specifically retail traders. We realize that not everybody here stays tuned in and day out, every second of the marketplace. So that's a little bit about some of my background. I still do a couple of TV appearances every now and again. This is actually TD Ameritrade TV. Do spots on there. I actually going to do a spot on there in the next 24 hours. This is CNBC. It's Don versus Mr. Wonderful. Couldn't have been a nicer guy. With that, I want to jump right into it. Check your baggage at the door. There's no room for your baggage in this session this evening. And I hope you guys recognize that. And as I was saying, I get pretty adamant about tonight's session. Tonight, we talk about hedging. To me, it's the single most important thing. that is continually overlooked. Okay, you have to recognize I've worked, okay, at a brokerage firm all the way through the financial crisis. You know, I traded professionally during the dot-com bubble. We did extremely well during the dot-com bubble. Watching the financial crisis was absolutely gut-wrenching. The stories I could tell from October of 2008 alone would make most people just duck and cover and hide. I'll probably bring up a couple of those tonight because kind of fits the mold. I mean, listen. First of all, set aside any preconceived notions of what you think can happen in the markets. Just forget it. I don't care whether you're bullish, whether you're bearish, doesn't matter, because there's no room for that tonight, right? When volatility hits markets, risk has to be in check. That's the bottom line. Volatility hits the markets. If your risk is not in check, you're toast, right? Good risk management has to start with the perception that anything can and absolutely will occur. That's the one aspect that people don't necessarily recognize about risk management. Okay? Anything can, but what? And will happen. Anything can and will happen. What else do you have to know? Okay? Well, prepare yourself for any event. Think about this for a second. And I'm not poking fun at this, but how hard can it be? The market can move what? Up. It could move down. It could move sideways. So get rid of the expectations, some of the negativity and so forth. Well, momentarily here, I am going to show you enough negativity. Ready? I wanted to show you some recent headlines because this is what we're bombarded with on a day-to-day basis. And people say, why? Why now am I teaching about hedging? I don't know. Maybe because the marketplace is at an all-time high and everything that you're bombarded with is negative news. I got trade wars. I got this. I got that. Here, let's have a negativity party for just a second because I just want to get this all out in the open. By the way, everything I'm actually showing you is within like the last 3 to 4 weeks. So let's get down to it. All right. So, well, let's see if I can fix my my little pen over here. One of the first things, here you go, October 16th, right? So let me make sure we're good there. Right there, October 16th, 2019, global economy faces $19 trillion of corporate debt time bomb, warns the IMF. The irony of the IMF, it's the International Monetary Fund. The head of the International Monetary Fund, well, that's Christine Lagarde. She now actually runs the ECB, which is the European Central Bank. I love it. It's like alphabet soup. IMF, ECB. Here's another one that was published like literally the day after. Okay. U.S. stock market is overvalued. Again, the IMF. Wait, we're not done yet. IMF warns Europe to make emergency plan for economic slump. Well, that one's November 6th. So the IMF, they've been busy, people. EU facing economic meltdown as IMF warns emergency plans needed urgently. By the way, these are related stories. I just wanted to throw that out there for your consumption. So IMF, which again, it's like the central bank, okay, for central bankers. It's like the main central bank. So if you look at the Fed, you look at the ECB, you talk about Bank of Japan, you got China. Well, the IMF, well, they're supposed to be kind of holding all the pieces of the puzzle together. And instead of holding all the pieces of the puzzle together, if you haven't noticed the IMF, you think they're a little negative. I mean, listen, I say check your baggage at the door with negativity, but then we throw this out, and then we throw this out, and it gets better. I also wanted to show you, IMF is not the only one. Goldman warns that buybacks are plummeting right now, ending, okay, a big source of buying power. Most people miss this article. It's October 21st. That one's absolutely huge, okay? Bleak decade ahead, okay, for stock and bond returns, warns Morgan Stanley. I just want you guys to understand that every major house is in on this, whether it's the IMF, whether it's Goldman, whether it's Morgan Stanley. Wait, let's throw JP Morgan and Jamie Dimon in the mix, warns there's a recession ahead. Now, if you missed that one, Jamie Dimon said it October 15th, right at the time pretty much of earnings. Wait, it gets better because JP Morgan has more to say, warns U.S. money market stress to get much worse. That is something that most people are unfamiliar with. It's talking about the repo market. The Fed's been talking about that extensively lately. It goes on. Signs of stress in leveraged credit are numerous and multiplying, warns Bank of America. We couldn't leave Bank of America out of this October 27th. All right. And last but not least, some of the world's richest brace for a major stock sell-off. Yeah, that one was today. By the way, that one's brought to you by none other than Bloomberg. If you want to look any of these headlines up, by all means, that was Bloomberg, today. With that, decisions, you're going to have to make them. I am not here to tell you that the marketplace is going down. That's not what I'm here for. I'm here to say if you have a 401k, if you have an IRA, if you're a long stock, if you own anything, what do you intend to do with these investments? Okay. And I think that's a wide open question. Are you going to hedge? Are you going to hold? Are you going to fold? Listen, the risks out there right now are real. Traders and investors often forget, or they just turn a blind eye to their 401ks, their mutual funds and stock portfolios. I mean, listen, I've done this long enough, okay, that I know everybody goes, it's okay. I'm in this for the long haul. I don't know. Whether you're 45 years old, whether you're 65 years old, whether you're 75 years old, I have the question for you. When is the long haul over? Is that when you have one foot in the grave or both feet in the grave? You realize that all it would take is one major market sell-off to decimate people's retirements. That's it. Just takes one sell-off. Where do you want to go to? 30, 40%, okay, in a marketplace? Easy, no problem. Okay. Then people say, well, I've got bonds, and well, how have those been doing lately? They don't yield anything because they're bonds now, and yet they've been selling off lately. Okay. Do you have a portfolio? Okay. And what do you intend to do with those investments? I think that's a fair question. If you're tuned in right now, please, by all means, chat in. Do you have a portfolio? Do you own some stock? Okay. Do you have a 401k? Do you have any type of retirement funds? Okay. And it's okay. Again, I want to make this an interactive session, even if you're watching this on a recorded session. Okay, answer the question. It's one of the most important, aspects of your life, and people are going to push it aside. And again, we just don't want to see another 2008, 2009, and I'm not indicating that's going to occur. Okay, there's just no reason to take drastic downside risks, especially at a time where everything you're bombarded with is negativity and we have to face the election. Okay, forget about the election. We've got to face Brexit before the election. We've got to face, we're one tweet away. Literally, we're one tweet away from breaking the deal with China. Okay, even if that goes well, phase one of the Chinese deal isn't looking that good. Again, too many risks is all that I am saying. I like it. Some people have a 401k. Some people have a self-directed IRA. All of it. Fantastic. Okay? Core strategy and trade logic. That's what we're going to start to dig into. Today, I want to introduce a real-world strategy that you can start using tomorrow to help mitigate, that is, control some of that risk. Reduce risk, maximize returns. What if I could teach you one strategy to allow you to remain in markets? I'm not here, again, to tell you to bail out. I don't want you to do that. Okay? I'm here to tell you that you can actually stay in markets just with considerably less risk and still have that potential upside. And I say, why I say potential in this case? Because I can't tell you if the market's going to continue up. Neither can anybody else. Right? If that isn't evident to you at this point, if that isn't clear, okay, then you need to get out of the market altogether, because I can't stress this enough. Nobody knows anything. Especially right now. As I said, we're one tweet away from markets getting rocked to the downside. Or, hey, maybe the Chinese deal does go through and they go, oh, great, now let's sell. Right? I think everybody should be interested in this if you have a portfolio. Listen, this is what your portfolio looks like. If you're long stock, by the way, the word long means you own it. If you're long stock or mutual funds, the following SPY position is the resulting risk of 1,000 shares. Okay? The SPY is similar to the risks of many portfolios and mutual funds. All I'm saying is, and by the way, the spider, if you're unfamiliar with it, let's actually bring it up. Bring up the SPY. Bring up the SPY. So the spider is like a $300 ETF, right? It represents the S&P 500. So if you owned 1,000 shares of the spiders, like how much capital are you really in for? And the answer is right around, that's like a $300,000 plus portfolio, okay? Even relatively docile volatility, it's going to cost you tens of thousands of dollars. Let's look just at a mild little sell-off over here. Let's say the S&Ps go down to 280. Okay, that's going to cost you $30,000. Want to learn how to actually reduce that? Anybody? Because this is where a lot of people, and there's actually people are chatting in right now and saying this. They go, I go to cash, I got cash, this is totally nuts right now and doesn't even make any sense. But you don't necessarily have to go to cash. If you look at it and you go, this is totally crazy, but at the same time, I kind of want to be in, but I'm kind of nervous. That's the strategy we're going to talk about tonight. Listen, a move to 280 cost you $30,000. Has the spiders, have they gone to 280 recently? All right. Here, there's actually a move, I don't know, just a couple of months ago, all the way down to 275. Let's get crazy. Here's a move in the 280 category. That was just this summer. Here's a move at 285. That's the beginning of October. I mean, a move back down to 280 is nothing. That's the point I'm trying to make. This is relatively docile volatility will cost you tens of thousands of dollars. Okay? Stops, they're not going to save you. Who are we kidding here? Sure, you can use stops. First of all, they don't have any stops on your mutual funds. I'd love that. Call up like Vanguard. I would like to put a stop on my Vanguard 500 mutual fund. They're like, oh, this is Vanguard. I don't think you understand how it works here. Okay, we take your money, we keep your money. Well, what do I get? You get, you don't get much, but you get the S&P 500. You go, but I could just buy the spiders. Okay, and you know what Vanguard used to say? They go, yes, but you have to pay commissions. But that's when you turn around now and say, yes, but commissions are free. They got nowhere. They got nothing. Okay, listen, stops. They're not going to take you out in a fast market. It's just not going to help you. Are they really going to get you out at the price you intended? No chance. Will stops be there to save you in the event of a major correction, a fast correction in a short period of time? Absolutely not. Stops, can they control risks to your 401k or mutual funds? No. Stop with the stops. Okay? There's nothing definitive about using stops to mitigate risks. And we need something definitive because I'm going to tell you right now, you want to place your life savings, okay? A life savings with a stop order, you're out of your mind. I worked, okay, on technology for what is effectively the largest order flow in terms of a brokerage firm. This technology, Thinkorswim. I know exactly how the order routing system works, okay? My group helped perfect the order routing system on Thinkorswim for 7 years. You put your life savings in here at a stop order, okay? You're totally out of your mind. You don't understand. Your life savings then is sitting on a server. That server gets gapped over. Anything can happen to it. It's crazy. There's nothing definitive about that. Now we're going to talk about hedging. Let's get into the idea of a hedge. Now, some of you guys are brand new to this logic, and I want to go out and I want to kind of recap a couple things. First, we're going to go out and we're going to assume that we actually do buy stock. And it's not often I do that, but I'm going to say you're going to go out and you're going to buy a stock. And let's say that stock is trading right at $100. So we're going to call this stock at 100. And you've bought it. How many shares? Let's just buy 100 shares. It's okay. Okay. What is a hedge? Now, I'm going to teach you, if you will, the most elementary hedge out there. When I say hedge, risk reduction tactic, the most elementary risk reduction tactic is not what we're getting at tonight, right? We got to teach this to be able to move forward. We're going to go out there. We're going to buy that stock at 100. We're also going to go out, okay, and we're going to buy, let's say in this case, a 100 put. Now, some of you guys have absolutely no idea what a put is. Okay, what's a put? Well, a put's an option. Oh, I said the O word. Is everybody okay? Is everybody okay? Because I said the O word. Because the O word, options. Okay. First of all, again, this is an elementary, one, and I'm going to go out and I'm going to buy a put and I'm going to pay $2 for it. $2. What does a 100 put give you the right to do? Give us the right to sell the stock at 100. Now, how long is that going to be good for? Let's say 1 month. Now, I'd have to say that paying $2 every month, I don't like the idea. But don't worry, I'll get there. Don't worry about the cost. We just got to get through the idea of a hedge. So you buy a stock at 100 and you buy a put. Buy stock, buy puts. Buy stock, buy puts. Buy the stock at 100. Buy the 100 put. Why am I buying the 100 put, Don? Because you're buying the 100 put because just in case the stock goes down, you could sell it at 100. Let's go through a couple of examples. You ready? You have a $100 stock, but you also have a $100 put. If the stock goes down, okay, let's say to 90, okay, what's your 100 put going to be worth minimum? You guys tell me. So you have a 100 put. A 100 put gives you the right to sell the stock at 100. The stock, though, is currently trading at 90. So what's the 100 put worth minimum? It has to be worth at least $10. How do you know it's worth $10? Because if it's not worth $10, the put actually gives you the right to sell the stock. And if you could sell the stock at 100 and everybody else in the world could only sell the stock for 90, it's got to be worth at least $10. Right? So 100 put with the stock we're trading at what? At 90, it's worth $10. Let's say the stock goes all the way down to 80. Now that's not our intention. If you own the stock, where do you want the stock to go? I want the stock to go up. But the stock that you buy never does go up. Your stock goes down. So you have a 100 put and the stock's now trading at 80. What's that put going to be worth? A minimum of $20. It's going to be worth at least $20. All I'm doing is getting through. This is what hedging is about. A hedging, if you buy the stock and buy the put, yeah, the put's going to cost you $2, but don't worry about that right now. We'll get there in a moment. That put's going to cost you $2, but the 100 put does give you the right to sell the stock at 100. So the logic of this is that you can buy the stock at 100, you can feel warm and fuzzy overnight, and if the stock goes up, let's say the stock goes to 105, okay, you get to sell the stock for 105, but you did have to pay the $2 for the put. So all of a sudden, that put is eating into the profitability. You're like, I don't like it. Okay? Yeah? Really? I don't like it. But it sure beats the stock going down to like $80 and you owning it. And you're like, you realize, okay, a lot of people don't realize that strategy and that strategy alone, how powerful it can be. The problem with the idea becomes expensive, right? So you go out and you own this stock at $100. Because if the stock doesn't move, you pay $2 and you pay $2 and you pay $2 and pay $2. All of a sudden, those puts really add up. What if we could get the puts for next to nothing? Well, we'll talk about that. Some people think that they understand how to do that, but they don't understand it because what they'll do is cap your upside. We're going to get to something that won't cap your upside. I'm going to throw that out there for a moment. Now, time out. Do we understand the concept right now? Okay? Speak or forever hold your peace. Do we understand the concept right now of what a 100 put gives us the right to do? Okay? If we buy a put, what does the 100 put gives the right to do? Gives the right to do what? Sell stock at 100. Are we good? Everybody? Because again, as I say, speak now, forever hold your peace, because it's important that we understand that concept because we're going to start to move into the dynamics of this marketplace, right? We just had to go through what I would term an elementary example before we really start to ramp things up. Ready, guys? Ready to start ramping stuff up? Because we're going to go from one extreme to another, right? I mean, listen, options that can help you in controlling that risk. Now, let's go with the dynamics. If you've never heard this phrase before, it's called dynamic hedging. What dynamic hedging implies, well, you're hedging with the dynamics of a marketplace. Let's get down to it. I'm actually going to show you an example, and then we're going to go from there. We're going to do an example that basically, right, goes out and says, oh, you know what? I'm going to go out and I'm going to buy me some stock. Let's go out and let's buy, okay, let's put it at 100 shares, all right? 100 shares. Now, maybe you own 25 shares, maybe you own 50 shares, and we can show how to hedge a smaller number of shares. That's not a problem. But to keep this simple, to keep the logic flowing, let's just use 100 shares. So I own a stock, okay? I own a stock. By the way, I call every example, I call it stock, right? And let's assume that stock is trading right at, let's make it $50. Let's make this really easy. So I own a stock and the stock's at $50. So I go out and I want you to know, I definitively do, okay? I'm going to buy stock and stock is going to be trading at 50. Now, the exact same time I buy the stock at 50, what else am I going to do? You tell me. Okay, what am I going to do? Well, in this case, to keep up with dynamic hedging, the dynamics of the marketplace, I'm going to buy the stock at 50. I'm also going to turn around and I'm going to buy, okay, a 50 put. Now I'm going to buy that 50 put for a period of about, let's say, a month. And in this case, it's going to cost me exactly $1. That's going to cost me a $1 debit. So I buy the stock at 50, I buy the 50 put. Time out. What's the 50 put give me the right to do? Gives me the right to sell the stock at 50. But if you're buying a stock at 50 and you buy the 50 put, let me ask you something. Where do you want that stock to go? Where do you want the stock to go? Up or down? You guys tell me. I buy the stock at 50, buy the 50 put. Buy stock, buy puts, buy stock, buy puts, buy the 50 put gives you the right to sell the stock at 50. But if the stock goes down, you can sell the stock at 50. Okay? Where do you really want the stock to go? Let me tell you something right now. Anytime you buy a stock, you want that stock to go up, unequivocally. Because if the stock goes down, yes, you have the right to sell the stock at 50. Okay? But then you just paid $1 for it. Okay? You paid $1 for it. Meaning that you're going to lose $1 in that case. Because if the stock goes down, let me show you. Let's actually make the stock go down. Let's say the stock that you bought at 50 does go down. The stock goes, crashing all the way back down to 45. Now your stock's at 45. So what do? Okay? What do you do when the stock's sitting at 45 now? Oh, first, I would like to say I am going to keep the stock. I like the stock. If you love it at 50, you're really going to love it at 45. But I'm going to turn around, first of all. Let's whack my put. Whack it means sell it. Let's sell, okay, the 50 put. If I sell the 50 put, let me ask you something. What's a 50 put worth when the stock's trading at 45? You have the right to sell the stock at 50. The rest of the world can only sell the stock at 45. What's a 50 put worth? Okay, what's a 50 put worth when the stock's now trading at 45? It's worth at least what? $5. So there, I collect $5, right? Now, what do I do with the stock at 45? Anybody? Total silence right now. Okay, what do I do at 45? I just have a stock. I just sold what? I sold the 50 put. Now I should be nervous. Because if I sold the 50 put, I don't have any risk reduction. I have to go out and I have to buy, okay, a 45 put. What do I have to pay for the 45 put? I don't care. Let's pay another $1 for it. So I pay another $1 for it. So now, what have I done? Right? I got a couple of different trades in here. I have a buy, okay? Stuff I bought, stuff I sell. We'll keep tabs up here, right? Looks like I bought a put here, bought a put here. We'll keep tabs in a moment. So now the stock's at 45. I buy a 45 put for $1. Why? Because, listen, I bought a stock at 50. By the way, how do you get a stock to go down? You buy it! So you did buy it, and the stock did go down. But I was hedged. And then I re-upped my hedge. I bought a 45 put as well. So now the stock's down at 45. Then where's the stock go? I don't know, the next couple of weeks. Let's draw it all the way up here. Let's get crazy! Now the stock goes up to 55. And the stock goes up to 55. Here's what I want to do. Do I want to get out of it? No. I just want to turn around right now, lock it in. Buy a 55 put. Buy the 55 put. I don't care. Pay another $1 for it. Because you buy that 55 put, you pay $1 for it. What's the worst that's going to happen at that point? Well, stock can go higher or it can go a lot lower. Now let's continue from there. When you buy that 55 put, though, you have to realize you just lock that stock in at 55 because the 55 put gives the right to sell the stock at 55. All of that upside potential cannot be taken away from you. Want to see? Let's say earnings come out on this stock, and earnings come out on the stock, and they're absolutely horrible, and the stock just dives. Oh, yeah. Now, this looks more like your chart. Stock goes all the way down to 40. What do you do down at 40? Well, first of all, you have a 55 put. Okay? We could turn around, we could sell the 55 put. What are you selling the 55 put worth? What's it worth? Okay? What's it worth? What's 55 put worth with stock trading at 40? Anybody? It's got to be worth trading at least, what, $15? So what? Collect $15 for that little monkey. It's worth at least 15, but now the stock's trading at 40. So what do? Go out and buy a 40 put. You probably have some cash on the side too. Let's check it out. Stop right there. You bought a stock at 50. Now the stock is trading at 40. Are you getting killed? Absolutely unequivocally no. This is what dynamic hedging is about. This is hedging 101. Okay? How many people can honestly say, right now, how many people can say that you are using some type of hedging strategy against stocks? By the way, you could do this against mutual funds. You could do this against a 401k, right? Let's add this stuff up. We bought a couple of puts. It looks like I bought a put right here. So let me change the color so that we're clear about this. Looks like I bought a put here. So that's going to cost me $1. Then it looks like I bought a put here. That one's going to cost me $1. I definitely bought a put up here. That one's going to cost me $1. And then I bought another put here, let's say for $1. And that one's going to cost me $1. And I'm just keeping it easy. It's $1. It's $1. It's $1. Oh no. It just cost me what? Cost me $4 to hedge. Cost me $4 to hedge. But what did my hedges recoup? Right here, I was plus $5. I was plus $5. And over here, I was plus 15. So the hedges recouped how much? 20, of which you had to pay 4 out. Net, what are you up? 16. Your hedges, okay, worked out. You're up 16. You bought a stock, though, at 50. The stock went to 40. What'd you lose in the stock? $10. Here's how a stock goes from 50 to 40, and you're still up $6. That's hedging 101. I'm telling you, you need to learn this stuff. And then you need to learn how to do it against a 401k. And you need to learn how to do it against your IRA. Because if you're not doing this, okay, it's not about leaving money on the table. You're leaving your life savings at risk right now. Okay. And I stress this constantly, hedge. This is the most rudimentary example. Now, how many people think that you could probably do this? Let's see. How many people think you could probably do this? And how many people think that the put's going to cost you $1? Because I don't want you to think that I'm coming up with some, off the cuff or ridiculous strategy over here, which you can't replicate. Because I'm going to tell you right now, that isn't a ridiculous strategy. That's an actual stock, and the stock is called Intel. So anybody here own Intel? I just wanted to throw out Intel. Okay. The stock, which point do you want to pick it at? At $50? Okay. You want to come back a little further in time? Look, we can go back over the last 3 years. Let's get crazy. Go back over the last 3 years where it was trading at 45, shot all the way to 60, dropped back down to 45, dropped up to the mid 50s, backed off to 45, took back off to 53, backed off before hitting again. Earnings, I was okay. Intel, that's one of them. My example that I just did moments ago was based on Intel over the last, this is 9 months of Intel movement, because the example started at 50. And I want to show you this. This is a real example. Okay. There's the stock at 50. I moved the stock down initially just to make a point. The stock actually moved up and moved up quite considerably. Then it dove to 44. Then it went up again. Then it dove. Okay. This is a layup. For an example. And then you say, well, what about the cost of the options, Don? You want to see the cost of the options? Here's a 30-day option. The at-the-money option on a $58 stock is trading for $1.20. You think $1 isn't a real example? On a $50 stock, that thing will be trading for $1 all day long. That's what dynamic hedging is about. And I wanted to make that clear. Okay. By the way, I've also, I was thinking about, when I was looking at this example, I was also thinking about Cisco, where I also keep positions inside of Cisco. The Cisco is also not dissimilar to Intel in the dynamics of this. It's beautiful. You look at something like Intel or Cisco, and you know what? These stocks are paying decent dividends, almost 3%. It's better than the Fed. Okay. Look, you get 2% off Intel, and you still get to lock in all the gains from the dynamic hedge. Listen, you need to learn to lock in your gains. What if we could add a risk reduction strategy to your existing portfolio? Don't worry about Intel. I just wanted to show you a real example that people aren't taking advantage of. Okay? And then somebody says, like, can I buy puts in a Roth IRA against 100 shares of long stock? Of course you can. All right? Everything, by the way, everything that I'm talking about here can be done inside of an IRA. In fact, I'm trading. I've got a bunch of accounts, but I actually trade on a day-to-day basis now inside of my IRA. That's everything I do. The whole portfolio here at TheoTrade is all created inside of my IRA because I wanted to make it applicable to you. Margin, forget about it. You don't need no stinking margin. You can use margin if you want, but you don't need to. I worked in the brokerage business for too long. Margin doesn't scare me. The interest rate associated with margin is ridiculous. Most people have no idea what interest rates associated with margin are. It's like paying off a credit card. It's like worse than junk bonds. It's horrible. Okay. Listen, learn to lock in your gains. You got to learn a risk reduction strategy, and I could add one to your existing portfolio to limit downside exposure, lock in your gains, and allow you to keep most of the upside potential over there. Okay? But why are you not doing this already? Listen, everybody, you're one trade away from this. Okay? Earlier tonight, I showed you precisely, okay, 1,000 shares of the spiders. Well, here again, okay, this is 1,000 shares of the spiders. How did I do this? 1,000 shares of the spiders right here, okay? That's where the spiders currently are. If the market tanks, doesn't look like I can lose more than what? A couple $1,000. Look, that's $10,000 of risk. That's zero risk. I'm somewhere in between. It looks like I can lose about $7,000. But you realize this is a $300,000 portfolio. This is 1,000 shares of the spiders. 1,000 shares of the spiders is huge. Okay? Welcome to hedging. And I'm telling you right now, this one, upside potential is also, okay, huge. So what do you have? You have limited downside risk, huge upside potential. That would interest you? Because this is something that is designed specifically for a 401k or an IRA or a mutual fund or a basket of stocks, but you could do this on an individual stock as well. Welcome to the Atomic Hedge. Okay? What is it? The Atomic Hedge, it's a strategy, okay? It uses the purchase of put options to counter downside risks, precisely like I showed you a moment ago inside of Intel. Works in a 401k, works in an IRA, again, works in a mutual fund. The put options are financed, though, okay, through selling out of the money call spreads. So what we're doing is we're not going out. Like a moment ago, we were out there and we were paying what? Okay, every put that we bought, we had to go out. He paid $1. He paid $1. He paid $1. He paid $1. Now we're actually financing it and getting the entire trade for zero. All right? When I say the trade for zero, that's what we actually call even money. I buy a put and I'm able to actually finance the cost of the put by call spreads. Sounds easy enough, right? This trade needs to be precise. It needs to be definitive. It's got to be perfect in order to correctly counterbalance your individual risks. We're going to view a few examples now. Now, I'm actually going to take you into, structurally speaking, what this trade looks like. Okay? What does this trade look like? Now, let's say that you did own, in fact, the spiders. Okay? Here is the SPY. What is the SPY? The SPY equals the S&P, 500. The SPY is the S&P 500. And that spider is trading at, we're just going to call it 300. We're going to go out, okay, and in this case, we're going to buy puts, okay? We're going to buy puts. Doesn't matter what put right now. We just want to teach the logic of the Atomic Hedge. We buy puts. Why do we buy puts? Because the puts gives the right to do what? They give you the right to sell. Now, you don't have to own the spiders. I'm just using the spiders for the example. But you buy puts. Why? Because puts give you the right to sell. And then to finance the cost of those puts, we'll actually sell, okay, what they call spreads. And I'm going to tell you right now, okay, initially you look at this, you're like, okay, I'm buying puts and selling call spreads. Selling call spreads, though, doesn't cap the upside. You know, a lot of people in here are probably familiar with what's termed a covered call. You know what the problem with the covered call is? The covered call caps the upside. Call spreads don't cap the upside. So what do we have? Really not much downside risk, but a ton of upside. That's what this is about. That's why I showed you that risk graph just moments ago. When I showed you that risk graph, okay, now it'll make a lot more sense. Limited downside risk, almost all of the upside. Okay, once that marketplace accelerates to the upside, which is precisely like, look at what the S&Ps have done. Look at what we have done. All right, let's go over to the spiders. Okay. That kind of looks like our trade. I mean, if the S&P goes flying up, guess what? Okay, the S&P goes flying up. We're right there with it. We're right there with it. And that's the most imperative thing to this. The Atomic Hedge, none of that downside, almost all the upside potential. Now, the Atomic Hedge, a little bit deeper explaining. Okay, you have your 401k sitting in some strange place, okay, that you can't touch. I know. even though I worked in the brokerage business, okay, we still had to have a 401k. And our 401k, all right, it didn't have a lot of flexibility. When you work at a brokerage firm, they really, really lock you down. And people always ask, like, you worked at a brokerage firm. Why'd you have a 401k? Because they matched huge amounts of money in that 401k. So, of course, everybody does it. And then they give you like 5 different things to select from. By the way, I love 401ks now. Whenever you select something, they go, you're in the 2050 fund, Don. I go, what the hell's the 2050 fund? That goes, it means you're not supposed to retire until 2050. And I go, oh, okay. The real reason for that, it's great marketing because it assumes that you're going to hold the fund until 2050. That's why they do it. So the 2050 fund, right? That could be mutual funds or a basket of stocks. Listen, all I want to say is this, okay? You have an account, and I get it. You can't really touch that account. That account is over here, and that's actually why I drew this. Your account is like a little bubble child, okay, that you can't touch. It's the bubble boy. So the bubble is right over here. You can't touch that bubble. So what you do is you can come into a normal, either taxable account, okay, or your IRA. You could actually, this could be your IRA, and you could actually buy the puts in the IRA and sell the calls in the IRA against the 401k. It's still your money against your money. This blows people's minds. They're in 2 different accounts, but it doesn't matter. You have this $132,000. I've seen this happen before too. I've seen people's 401ks just go plummeting in value, and then their IRA went shooting up in value. And they're like, oh yeah, tax-deferred account against a tax-deferred account. But then somebody says, I don't have an IRA. I just have a 401k. Good. Okay. You can actually hedge. You can reduce risk in a normal, we'll call this, okay, taxable account. You could do this in a normal taxable account. And somebody goes, well, what if my 401k goes down? Well, your taxable account's going to go up. They go, yes, but then I have to pay taxes. Yeah, you know what? Would you rather just lose money in your 401k? Or would you rather lose money in your 401k, make it back in the taxable account, but then have to pay taxes on it? Okay? And then you can actually take some of the money you made in your in the regular taxable account and put it into an IRA, which will be tax deferred. It just gets better and better. You need to know, okay, this is what people that have money are doing. All right? They're actually hedging one account against another. Can I say and go as far as they're doing this to avoid taxes? Okay? Hell yeah, I can say that. Right? That's what part of it is like by design, right? Hedge your $132,000. This $132,000, I get it. You can't touch it. It's in a 401k. It's in an IRA. It's the bubble child, right? But you can still use an alternative account. You go, I don't have an alternative account. Get an alternative account. Find an alternative account. It can only cost a few $1,000s to hedge, okay, a massive amount of risk, which is your 401k, your mutual funds, or any basket of stocks. You name a basket of stocks, and we can teach you how to hedge that basket. Anything, including bond portfolios. Listen, okay, the Atomic Hedge provides you the ability to hold your stock, hold your mutual fund, and your 401k positions without absorbing unnecessary or possibly catastrophic downside risks. Okay? You need to learn, okay, to turn this into something. Assume you own, and this is the exact same example that I threw you earlier. Assume you own 1,000 shares of the Spiders. Okay? Now, as I delineated a little bit earlier, 1,000 shares of the Spiders is how much? Okay? How much risk do you have with 1,000 shares of the Spiders? Right? This right here, that's a $300,000 portfolio. If you woke up tomorrow and the market's down 10%, I think you pretty much figure out very quickly that you just lost $30,000. Okay? All you have to do is cut that off. You can cut that off and still leave yourself the upside potential. Hedge now or forever hold your peace. No matter how many times I've taught this, and people are like, why are you so adamant about this? I don't know. I got a front row seat to the end of the freaking financial world back in 2008. Kind of changes your view in the marketplace. There was actually a day, it was October 10th of 2008, where I literally had to turn my screen off because at the time on October 10th, go look it up, on October 10th, there was actually a 12% swing inside of the S&P 500. And at one point, okay, the accounts that I was monitoring were down $400 million plus. It was moving so fast, we were just like, whatever, doesn't matter at this point. If we lose it, we lose it. You know, it just doesn't matter. Okay, $400 million. That wasn't my money. That was our clientele. Anybody and everybody at Thinkorswim, I could watch one bottom line risk reward number. You see people lose $400 million, okay, in the first 2 hours of a trading day. Kind of changes the way you feel about, markets. That's why I'm so adamant about this. Listen, this is the Atomic Hedge. The Atomic Hedge, it is new, but this is a strategy that just doesn't penetrate. Like, people get like crazy about it, but it just doesn't penetrate. They don't do it. Okay. Why? I don't know. Limit your risk to the downside. It's pretty easy to do. Okay. We're going to teach you to buy the put, sell a couple of call spreads up against it. Gives you the upside potential, none of the downside risks. Massive upside, limited risk. That's what the Atomic Hedge can do for you. This is 1,000 shares of the spiders. Maybe you don't have a portfolio that big. That's okay. Okay. But listen, this is what you want to use, and this is why you want to use the Atomic Hedge. You can use it to reduce risk of a 401k, a mutual fund, individual stocks, or portfolio stocks. It defines your risk. Okay. It limits capital exposure. It's going to protect your life savings, reduces downside risk, leaves you ample upside capability, locks in gains as well. That's one aspect I didn't even cover that much. If the market continues to go up, lock it in. Lock in the gains achieved in recent years without negative upfront costs. You got to have this in your life. You need it in your life, right? By the way, a little bit about what our members are saying. And I love this one because it says, I'm a retired 30-year broker from Smith Barney. This is talking specifically about this. They never taught us anything, okay, like what I get at TheoTrade, nor was the platform anywhere close to Thinkorswim. I'm learning more every day. Thanks for teaching the sessions. They're so valuable. All right. Here's another one when we're talking about this hedge. Just want to express my feeling as a new member at TheoTrade. Your class Saturday was one of the best classes I ever attended. Well planned and executed. You detailed heart of the trading strategy. Everyone could actually understand. Very well done. So far, my experience with TheoTrade has been good. So I stress this stuff, right? By the way, here's another one. Got a customer in life and me because of this approach. So we don't sell much here. It's refreshing to have you guys putting this together, sharing knowledge and not upselling everything. Listen, we are here to help you people hedge your portfolios this evening. Okay, invaluable applications for the Atomic Hedge. The Atomic Hedge can be used to counter risks in the following accounts. You can use this for a portfolio of stocks. You could use this on an individual stock. You could do this on mutual funds. You could do this on a 401k. You could do it with an IRA. And you can do this with a Canadian TFSA account. All right, all of them. You got no time, no problem. Listen, hedging is totally hands off. The hedge need not be monitored day to day. Just put the thing on, walk. Doesn't matter. The trades that I'm showing here are perfect for part-timers. Fraction of your time, okay, is enough to see positive results. I mean, a fraction of your time. Just put the thing on. I'll sleep better at night knowing that our clientele are hedged. And if you're not willing to take the time to hedge, why even bother being in the markets? And I challenge people constantly on that one because what are you going to do? Listen, tonight, let me just show you something tonight. The S&Ps are already down 9. You realize we haven't had a down move, okay, since what? Oh, the last good down day? That happened over a month ago. So what happens if you wake up to a decent-sized down day tomorrow? Yeah, a little tweet here, a little tweet there, okay? People got nothing. If you're not willing to take the time to hedge, don't be involved in these markets. Because this is a hedger's market right now. Part-time or not, I don't care. Take the time to hedge. A couple of characteristics of the Atomic Hedge. The attributes of this thing are undeniable. Limit the downside risks while maintaining upside potential. Risk is limited to precisely your comfort level. You want to fine-tune it? I'm not telling you have to go out there and hedge everything. Okay? But I'm telling you, the hedge itself won't cost you anything up front. So why wouldn't you use it? You don't need to use a stop order. Okay? You don't need to use a stop order. The probability of the profit is high. Okay? Especially if the market goes up. It's a perfect spread, though, to reduce the risk of a stock portfolio. And it's great to build returns on a smaller account because you can actually lock in those gains for a smaller account. Now, building the Atomic Hedge. Listen, some people are brand new tonight and they go, he said the O word. Okay, you got to learn a little bit about options. You okay with that? Okay, we can teach you. You give us a couple hours, we can teach you. Don't let options intimidate you. The spread below is being done for what they call even money. But the spread, it's a big, massive chainsaw. You need to learn to do this correctly. That's why I call it a chainsaw. Not to be intimidating, but you got to understand, if you want to get to where you want to go in the marketplace, the quickest, the fastest, the safest, the easiest way to do that in this business, in financial markets, use options. Use options. They're all about risk mitigation. People always portray options as, okay, weapons of mass destruction in the marketplace. Really? Because the last time I looked, options were designed as risk mitigation tools. That's why they originally put them out there. Options, okay, were all about risk mitigation tools. Okay? It's all of you that turn them around and twist them and contort them. But you know what? Used correctly, this stuff can be extremely effective in creating returns. Okay? Used incorrectly, you cut off a couple of fingers. People, learn this strategy to reduce risk, and don't fear it. Don't fear the Atomic Hedge. Maybe you have limited options experience. Again, we can show you how to place the Atomic Hedge in a matter of a couple of hours. What we do here at TheoTrade, detailed recipes for every trading strategy, including the Atomic Hedge. It's just like baking a cake. And I always say, you wouldn't bake a cake without a recipe. Maybe you would, though, if you've done it 20 or 30 times, right? If you're going to fly an aircraft, the most experienced pilots, what do? They still go through their pre-flight checklist. They walk around the aircraft, okay? They pull on the wings a little bit. If it's a Boeing 737, they just run completely. Max, that is, okay? But listen, you're going to go out and you're going to make a trade like this. Use the recipe book. That's what we build here. That's what we do at TheoTrade, because this is what you need to know to be able to successfully enter and exit the Atomic Hedge. See, that's the whole thing. Okay. Listen, tonight, I told you what an Atomic Hedge is. I showed you an Atomic Hedge. Does that make you proficient in the Atomic Hedge? And you go, maybe not even close. Okay. Because here's the things you don't know. How many contracts do I trade against my 401k? Raggy. You got to figure out, if you have a $100,000 401k, how many contracts of an Atomic Hedge? Do I use the spiders? Maybe I should use the QQQ. Wait, my portfolio is in bonds. Which bonds do I use? Okay, it just keeps getting better, right? What volatility should I seek out? The volatility is really high. Should I even bother hedging? Okay, can I hedge in high volatility? How far out of the money should I buy the puts, and for what expiration? Meaning, like the puts that you buy. I bought puts for $1. Yeah, but that was just a little elementary example. What puts do you buy? How far out? What expiration? Have you guys ever looked at an option chain? Go look at an option chain. Look. Look with me. Look at the option chain. You got 1 day, 3 days, 6 days, 8 days, 11 days, set, hike. I mean, it's ridiculous. 27 days, 29 days, 31 days, 34 days. There's a lot of options on them. There are options. You got to hit this right on. What do you think a recipe is for? You got to hit it right on. How many calls do I sell against the puts? You got to pay for this thing. You don't want to cap your upside. You sell too many calls, it's going to be wrong. What do you do, okay, when the puts go in the money? In the money, what does that mean? What do I do if the market really goes down? How do I build the trade? How do you actually execute the trade? When I say execute. Like, what's it going to look like? If I were to go out and I were to build an Atomic Hedge and I were to go some 30 days out, let's just show you a quick example. I go 30 days out and I build this little monkey. Okay. And I said, all right, so I did this, and then I go, I did a couple of, maybe one of these, couple of these, and then, maybe like a couple of those. Look at this. This one's actually done for a 79-cent credit. And I'll tell you right now, this one does not fit the criteria, but I just built that. Then you got to come over here and you got to check it out. You got to create a duplicate order. You got to analyze the trade. You got to hit confirm and send. Listen, all of that, okay? You need to know how to do it right. What's the right amount of risk for you? How about we can help you actually fine tune your risk? Let me show you what we do here at TheoTrade. It's all about recipes and trading. Trading, it's all about answering the what ifs. What's the correct options expiration? Done. We give you that. How much capital will I tie up in the Atomic Hedge? Boom. We need to tell you that. Okay. What are the strike prices? Which calls do I sell? How many? What strike options do I buy? Which puts do I buy? How much risk? What expiration? Okay. How much risk can I limit in my portfolio with this strategy? TheoTrade has all your answers. We built a recipe specifically for the Atomic Hedge. It's got a checklist. Okay. For each unique variable you're going to encounter. When I say unique variable, what are some of the variables? Okay, what are variables? I don't know, right? Think about this. Our TheoTrade recipes look at all the angles. It looks at the variables, okay? What an angle is. We will provide you with the following in the criteria. We'll give you the index product, the ETF or stock we can build an Atomic Hedge on. We'll give you precisely what put options to buy, which call options to sell in order to create the hedge. We'll give you the correct expiration cycle to build the Atomic Hedge. We'll show you the allocation model, whereby assisting you in selecting the number of Atomic Hedges to place for your portfolio. Okay? What to do in order to manage the trade. So we're not just getting you in it, we have to manage the trade and then place hedges continuously, never leaving your nest egg exposed. We give you the how, the when, the why, at what price. It's just the beginning, though, of the variables that you're going to face while using the Atomic Hedge. You know, and again, people always think to themselves, you can read what a hedge is. You absolutely can. You might even know how to build this hedge. But you need TheoTrade's recipe for success in this case. You just do. Okay? 20 years trading experience. That's just me. Access to client order flow for over 15 years. We viewed and studied millions of trading accounts. I ran education for 15 years at a firm with the largest option order flow in the industry. Okay? A lot of what we base this criteria on, it's not just the knowledge of trade. It's the knowledge of your own capabilities. I've watched more retail clients than pretty much anybody out there. We had 7 million accounts and we studied them. Okay. And we actually went back and figured out precisely, hey, what are people capable of? Can they put these hedges on? This, people, should really resonate with you. This strategy will save your life savings. Criteria, though, is your recipe for success. The following strategy and corresponding criteria requires attention to detail because we spent years fine-tuning this trade, the criteria. Okay, when you approach a section on criteria, you have to follow the steps to build a trade. What I'm referencing here, the reducing risk and maximizing returns blueprint. This is a course. The course is ready for you. Okay, and I'm telling you right now, in 3 hours, you're going to be shocked at how much depth we get to. The course is $497, which is, it's nothing to pay $497, okay, and learn how to hedge your portfolio. Now, bear with me for a second because there's another addition in here that we're going to give you. How about after you go through this course, we'll even allow you to email us personally. Make sure that your hedges are correct. It's important that you know, before I even get into the class, the criteria, and everything you're going to go through, you got to know right now, you get one-to-one support. You'll get one-to-one support. You can email us. You can't get me on the phone, okay? There's what? A couple hundred of you, one of me. You email me, though, what your portfolio value is. You're going to email me, okay, what you think the hedge is, and I can sit there and say, no, this is terrible, okay? This is totally wrong, and I'll help you do it the right way. It's that important to us, okay? Obviously, we have a limited space and capacity to do that, but it's important. Listen, this class, it's ready. It's ready. It's recorded already. It's a 3-hour course. It's available immediately with 24/7 access. You pay $497 and you're off and running in the next 15 minutes to be able to watch it. The class slide deck that includes the entry and exit criteria, you can download it immediately. The course is archived. As we said, here at TheoTrade, though, we also have mobile applications for iOS and Android. So you can download our mobile application. There's no additional cost for the application. Okay. And you can listen to the course. It doesn't matter. You want to go on an airplane at 30,000 feet and listen to it? It's fine. You could download the entire course, listen to it. Okay. You can even play it back at twice the speed. It's $497. Now, okay, before I go any further, I'm going to give you a little bit of the details, okay? And this is, if you will, it's the curriculum for the course. Now, I also know everybody, when they come there, I want a bonus. I'm going to give you a few. I'm already telling you, one of the bonuses tonight is we're going to give you unlimited email support, okay? Bear with me here with the Reducing Risk and Maximizing Returns Blueprint, okay? We're going to teach you how to actually build the Atomic Hedge strategy, protect your nest egg from a market downturn. Okay, why your retirement accounts are at risk of massive losses, especially in this market environment, and how to curb the risks immediately. How you can reduce risk for 401k, IRA exposure, even if you can't trade options in those accounts. Listen, your life savings is, it's just at stake. Don't take the chances. How to hedge your portfolio from pending market turmoil so there's not a repeat. And I'm really touchy about this, 2000 or 2008. You haven't had a real market downturn, okay? Basically in over a decade. A couple of scares here and there, okay? Maybe you felt the fear for a couple of minutes last December. But you haven't had a real market downturn that could wipe out retirement, okay? How to maintain upside potential while controlling your downside risks, okay? The strategy that'll help you sleep at night, okay? When to open, when's the best time to close the Atomic Hedge, all the keys for success, which strike prices, the expirations, give you the highest probability of success. All of it is a step-by-step workshop, okay, on how to come out and systematically reduce your risk. And it's just huge. It's a powerful trading strategy for your arsenal. Now, everybody that comes out this evening, I want a bonus, okay? We're going to give you one. Because, listen, we come out and, it's a course and it's $497. And then, of course, everybody's like, well, what else do I have to buy with this one? Well, TheoTrade, we go beyond one class or one indicator. People, listen, you want everything to trade and invest. You want it at one place and you want it at one price. Here's the first bonus. We give you access to now 87 trading classes. Time out. You'll get the Atomic Hedge. That's called the Reducing Risk and Maximizing Returns Blueprint. You will get that tonight. You'll also get access to the entire archive of every class that we've ever done. Good enough? Listen, what classes have we done? How to collect income being short, the guide to small account growth with in-out spreads, the next big short, okay? Selling high probability spreads, iron condor, selling premium, minimizing your risk, survive and thrive in extreme volatility, day trading, NASDAQ futures, covered calls, essential skills for consistency in trading. Do you realize you get everything that we've ever done? Every single class we're going to give you access to. When? Tonight. Why? Because it's wrong just to go out, let's sell a class for $497. And then what do? We come back a week later and we sell another class for $497. We're not here to nickel and dime you. You better realize that now, okay? In fact, these classes, I'm not the only instructor here at TheoTrade, right? We have 7 full-time individuals. These are the instructors. Jeff Bierman, he's an analyst trader and former chief market technician for TD Ameritrade. If you've ever been on the Thinkorswim charts, okay, a little bit of a debt of gratitude to Jeff Bierman. Jeff Bierman also moonlights as a professor of finance at Loyola. So you want to see Jeff? You can actually come and listen to one of Jeff's classes here at TheoTrade, or you can pay $42,000 a semester, okay, and take Jeff's finance class at Loyola. By the way, we're actually using a lot of his material, okay, from the professor of finance, because the stuff is unbelievable that they're teaching at Loyola. So he actually teaches literal, courses here at TheoTrade. Next on the list, Matt Williamson. He's our market neutral. He's our premium selling options strategist. Corey Rosenblum, that's our senior strategist. It's our resident swing trader. Guys are into swing trading. I'm telling you, this is the guy for you. Okay, Brandon Chapman, CMT. Okay, macroeconomics, technicals, and fundamentals. Brandon's claim to fame. There was a course that Brandon and I put together years ago, okay, inside of TD Ameritrade. The course was 18 months long. It cost $24,000. Brandon wrote the book for it, okay? So when we were building TheoTrade, I'm like, oh, one of the first people I've got to hire is Brandon, because the guy actually, again, it's a $24,000 course. We'll all tell you what we do here at TheoTrade absolutely smokes, okay, what that $24,000 course was. Again, we put the book together. We know. Steve Slim Miller, it's a 43-year veteran of stock options and a futures trader. Last but definitely not least, it's our intraday strategist, Tony Rago, NASDAQ futures. What does he do? Trades with our clientele all day, every day. That's your first bonus. Again, bonus number one, you get access to every class we've done. You want to learn about NASDAQ trading? Fantastic. You want to learn just about hedging and you just want to do this for the blueprint of how to do the Atomic Hedge? Great. But it's access to over $9,000 in classes alone. You'll never see an archive like this anywhere for any amount of money. You couldn't pay $100,000 somewhere and get the amount of material that we have here at TheoTrade. Okay. And my take is, I think you'd rather be overwhelmed rather than underwhelmed. Here's your second bonus. We're going to give you an all-access TheoTrade VIP membership pass. It's free. We'll give you 3 months unlimited access to TheoStream. What does it do? We have a live trading chat room. We broadcast 6 hours per day. I'm in there about an hour a day minimum. All of our traders provide real trade ideas, real-time market insights and analysis. Listen, I know that not everybody can be like, oh, I can sit there all day long and trade with them. Maybe you can, maybe you can't, but we provide it. It's part of the deal. We just give it to you. Why? Because it's the right thing to do. If you want to learn this business, okay, you need to understand this is the one-stop place to learn everything there is about finance and markets, okay, and to get support. We email out trades. We have 5 distinct trading portfolios. We have live daily coaching sessions, timely topics in stocks, options, and futures, and the instructors directly answer your trading questions via email. It's access to $997 in support, trades, and insight. Okay, you get all of that for 3 months. We getting somewhere? That's the second. I'm not done yet. This also includes access to 59 proprietary indicators, auto expected moves. Okay, when I talk about proprietary indicators, here, charts. Okay, you wanted to see charts. Okay, and again, I'm going to give you this indicator in a minute. I'm going to give you the TheoTrade RSI Laguerre in a minute. But I'll tell you what, you want access to other ones? Things like auto expected moves. Auto expected moves is the most complicated script ever in the history, to this day, of this trading application. Okay? We share everything. When I say we share, we share everything. Okay? This is an unbelievable script. Okay? It's incredible what you can do with it. I mean, it'll change the way you literally change the way you look at the marketplace. All of our scripts, everything is given to you. It's access to over $1,800 in indicators and scans. You got to realize, people go to other education firms and are like, let me charge you $1,000 for this and $1,000 for this. We've had it. Okay? Listen, what do we do here? We give you everything. TheoTrade includes everything you need to invest in trade. We give you classes. We give you coaching sessions. We give you email access to the instructors. We give you a live trading chat room and live trades. We give you indicators and scans. We give you literally mobile access 24/7. Everything you need to succeed. We've built literally TheoTrade. It's the Netflix for traders. There's that much in there. Tonight, okay, it's only $297 for 3 months. That's it. First question that always comes up too, I'm going to get it in a minute. Okay. Let me take you through precisely what this entails. Tonight, it is $297 for 3 months. All you have to do, go to theotrade.com/blueprint. Okay? Because this is the blueprint to the Atomic Hedge. So what do we give you tonight? The Reducing Risk and Maximizing Returns Blueprint. That's the Atomic Hedge. Okay? That's included in the unlimited streaming. Access to 87 trading classes. All of them are available immediately and on demand. You get them tonight. New monthly classes. Every month we have new classes coming out. Live trading chat room. Okay. What do? Traders provide real trade ideas, real-time market. I'll be in there first thing in the morning. At the bell, I'll be live. Broadcast 6 hours per day. We'll give you 59 proprietary indicators and scans. We will email out trade ideas. Okay. 5 portfolios. Daily coaching sessions, timely topics, instructors, Okay? Specifically want to mention this. You need help after tonight? You email us, support@TheoTrade.com. We will answer your trading questions directly. Okay? Now, to top everything off, we're going to make this a riskless trade. Okay? We're going to make this an absolutely riskless trade. Everything you need to start trading from novice to expert. We'll give you a money back guarantee. Trade with us over the next 3 months. If you're not satisfied, email support@TheoTrade.com. You have to give us the details of your trade. Okay? Details of the trade, receive a full refund. Why do we make it a riskless trade? Well, because I'm telling you, we put our money where our mouth is. Now, there's a couple of stipulations on here. You got to do 10 trades, okay, using TheoTrade criteria. I don't even care. Out of the 87 classes, I don't care. But you have to follow our criteria. You can't go like, I'm going to make it up as I go along. All right, listen. The initial account value, you have to have at least $2,000 in your account. Okay, again, you must follow the TheoTrade criteria. Did I say that twice? Yeah. You know why I said that twice? Because somebody goes, I did 10 trades. Okay, what'd you try to do? You did 10 trades? Listen, you watch a couple of classes. We are going to take you through it. Okay, and you must provide real account statements of trades. This ain't paper trading, people. You follow those stipulations. Can you do 10 trades in 3 months? Absolutely. I'll tell you right now. Okay, we trade. You can follow our trades. Our trades. If you follow our trades, we're going to do more than 10 trades. You don't like it? After 3 months, we'll give you your money back. It's $297. It's no, skin off our back at all to do this. But I am going to tell you one thing. Get into TheoTrade now. We're going to work with you directly. We're going to actually email back and forth. There's 25 spots available for the riskless trade deal. There's only 25 spots available for the riskless trade deal. And I'll tell you why we do that. The email mentoring kills us. 25 people get the riskless deal because, well, send us your trades to ensure you're properly constructing your hedges. I personally will take care of the hedging. Okay? I can't handle more than what? Okay, a few hundred people. There's 4,000 people already at TheoTrade. Okay? We're taking another 25 on tonight for the riskless side of this deal, and we do that because, well, we're going to actually help people construct their hedges in there. And it's critical. Again, what our members are saying. Just a couple of little things. First and foremost, holy crap. Okay, I've been a member of a lot more than anyone should, stock market education sites. None of them even come close to the amount of information on TheoTrade. Thanks, Brian K. Fantastic service. I became a self-directed with my trading through education I got here. Okay, I just want you to let you know, Don, how much I appreciate him and what he does. For the first time, my account is in the green. Okay, I also just want to say that I love your product. Just wish it had been around when I was starting out a few years back. It was well worth, and well thought out, covers different trading styles, emphasize risk reward, okay, and why it's so important, and teaches you how to trade different products. Thank you all at TheoTrade. You're doing a great job. Listen, covering again everything tonight. It's TheoTrade access you get today. It's $297. The first 25 people get a riskless deal. It's TheoTrade.com/blueprint. Go now to this site. And I'm going to tell you why to go to this site. Okay? Because that's where the indicator happens to be. I'm going to show you that here momentarily. The indicator that we promised you earlier tonight, the RSI Laguerre, it's at that address. Okay? TheoTrade.com/blueprint. The first bonus, 3 months all access VIP membership. Gives you the chat room, 24/7 archive, email trade ideas, trading indicators and scans, daily coaching sessions, 10 hours of live support. The second bonus gives you 87 classes. There's day trading and swing trading and technical trader, beginning options, new monthly classes. I'm actually going to show you part of TheoTrade here momentarily. Again, first of all, okay, follow me to this address because I'm actually going to take you over there right now and show you. Okay, follow me to this link for the RSI Laguerre indicator. So if you follow me directly over there, by the way, this is TheoTrade. This is actually what the site looks like. Okay, I'm going to take you back there in a second. But first, this is the enrollment form, the Reducing Risk and Maximizing Returns Blueprint. All right, you just follow me over. Again, it's TheoTrade.com/blueprint. Okay, it's $297. And again, we're here to support you guys. If you need us, you can call us, support@TheoTrade.com, or you can just click right down here and you can chat now. You can chat with us one-to-one. At the bottom of this enrollment form, okay, is the RSI Ligier indicator. That's right down here towards the bottom of that page. You want to read precisely what you're getting tonight. Okay, great. It's $297. Just click add to cart and you're off and running. Okay, it's very, very definitive over here. Okay, terms of use, yes, you agree. Pay with a credit card. Now, let me show you a little bit about TheoTrade, and then we're going to come back and we're going to answer some questions. By the way, one of the questions that came up already, and I'm going to nip this one right off. People go, what does it cost after 3 months? It's $297. By the way, I'm going to make this also really clear right now. This is not a membership. Let me say that again. Okay, what you're enrolling for tonight is not a membership. We have 4,000 people right now on TheoTrade. Okay. We're not using the term membership anymore because people get scared of memberships. Listen, it's 3 months, $297. If you leave after 3 months, I will still love you. It's okay. You want to come back anytime you can, come back. That's fine. If you want to continue after 3 months, it's $297. I want you guys to think like there's no big, you got to do this, you got to do that. You got to pay this, and there's no additional. There's nothing else that we sell here. Okay? That's it. It's $297. We give you access to everything that we ever did and everything that we're going to do for the next 3 months. I mean, that's it. You get access to all the new classes. This is also, by the way, this is the best time of the year to sign up because most people are like, Christmas is coming. You kidding? That's when you're home. The in-laws are there. Lock yourself in a room for 2 weeks when the in-laws are there. Okay? Go hog wild in the archives. We also broadcast a lot at that time around Christmas because my in-laws are here. So it's a good place for it. Now, I'm going to answer a couple of questions here momentarily. In fact, okay, I literally have a slide said your questions answered. Again, it's TheoTrade.com/blueprint. Just click add to cart. This is what TheoTrade looks like. This is the broadcasting window. Here's our chat room. Okay, you can actually see Tony Rago. It's one of our instructors. He's highlighted. He's in the chat room, and he's in the chat room just the last couple of minutes. I mean, this is, only 20 minutes ago. So you can actually talk to other clientele in here, right? Again, it's great. So all of it is right there. Now, we broadcast in this room starting in the morning. Now, if somebody says, I'm brand new. I have no idea where to start. We have something called Start Here. Start Here is, it says Start Here. This is the absolute basics to the extreme. Options 101. I know nothing about this entire business. Start here. Okay. 101, 201, 301. We literally built like university level courses. Order execution part 1. I don't care how experienced you are. You will gain from this order execution part 1, 2, and 3. Crash course on option Greeks. Getting your wrists under wraps. What products to watch and why. That's a 3-part series. Okay. That's the Start Here. After you go to Start Here, then people go, well, what do the classes look like? You want to see what classes look like? Here's the class archive. By the way, all the archives, right? There's an archive for what? There's classes. There's a Jeff Bierman archive, a Steve Miller archive. Okay, it goes on and on. There's even Corey's Corner. It's everything about Corey Rosenblum. It's great. Okay, Corey does a report, all right, during the week. So this is what the class archive looks like. If you're brand new, option newbie classes. If you want technical analysis, technicals. Listen, we have a genre of trading. There's day trading and trend trading and hedging and futures and stocks. You want to see what the option strategies classes are like? You realize for $297, you get access to every one of these courses. Every single one of them. Okay? It's an absolute slam dunk. You see what these classes look like, you're going to be blown away. I mean, you're literally going to be blown away. We just did a class a couple of weeks ago, Guide to Maximum Edge Trading Earnings. Okay? Here's what a class looks like. It's actually broken into archives. Hit play. Okay? This class, Maximize, you can click to download the slide deck. All right? We've got everything built in there for you. Then you can actually come over to the members area. We actually built like a search engine. Okay? Okay? You can search for volume weighted, volatility futures, options volume. You name anything in trading and you can search. It's like a Google, okay, for videos about trading. Anything you can think of will be listed inside of here. It's amazing. Again, that's what we've done in the archive over here. Again, I'm going to answer a couple of questions right now. It's TheoTrade.com/blueprint. When I say I'm going to answer a couple of questions, right? When I say I'm going to answer a couple of questions, I'm going to be really specific. Here are the questions, and then I'm going to answer a few more that are popping into the chat room. First, let me get these questions out of the way, okay? People always ask, what do you need to get started? You need a laptop and an internet connection, or any kind of computer internet connection. You know what? I'm going to go even further. Now you could actually use an iPad. You could use an iPad or even a mobile application, because trading on mobile is pretty phenomenal these days, okay? So you can do that. We have everything you need to get started, from absolute novice to the most extreme of traders. The second question, this is not a membership. We're not going to auto-renew you, or we're not going to bill you again. That's not what we're about. We are not a membership. It's $297 tonight. The first 25 people, though, this evening, get a riskless deal. When I say riskless, that's it. You don't, after 3 months, you do 10 trades. If you're not cool with it, that's fine. We'll give you back $297. Okay? We part friends. Fantastic. And I will review every one of those trades. Okay? Listen. 3, TheoTrade archives everything. Every word we say. We understand not everyone can watch live trading throughout each trading session. We archive it. You don't have to watch everything. You're going to find instructors you like, areas you like. You're probably not even sure what you like yet. You will. Okay? Number 4. We'll provide you access to TheoTrade Mobile, where you can download the archives and view at your leisure. Okay? You can email us anytime and receive a response within 24 hours, including trade-related questions. You can literally come in an email and say, am I doing this trade right? That's fair game here at TheoTrade. We're cool with that. All right? Number 6, you will gain access to every course TheoTrade has done in the previous 4 years. Every course we've done in 4 years, including classes, coaching sessions, live trading sessions. All archives are searchable. Name a trading topic, and we have an archive on it. Number 7, these trades can be done inside of an IRA account, a retirement account, with as little as $2,000 in the account. We also can help you get approved for option trading at several major brokerage firms. Here at TheoTrade, we have a relationship with E-Trade. We have a relationship with TD Ameritrade, where, of course, I resided for almost 15 years. And we have a relationship with Tastyworks. Those are the 3 major brokerage firms, okay, that we have a relationship with. Remember, there are 25 riskless trade spots available. Okay, you're in the first 25, and people are enrolling right now because I can see it on the back end of it. 25 riskless trade spots are available. When they're filled, they're filled. Get results. I'm telling you, take action. Get yourself hedged and enroll for TheoTrade. There's absolutely no risk to you. It's TheoTrade.com/blueprint. I wanted to throw a couple more, quotes up here. I'm very impressed with TheoTrade. I've studied under stock coaches, various strategy intellects, and different trading plans. I've not come across anything as good as what I'm seeing here. The people at TheoTrade are very helpful and extremely knowledgeable. I'm looking forward to this association for years to come. Don's the most knowledgeable person I've ever heard in my over 50 years of stock investing, and I've listened to many. His knowledge of how the markets work is like sitting next to a finance PhD. Highly recommend learning what this man has to say. So a little bit of background on here. Okay, thanks heaps. Your explanation is very clear. I'm so impressed that I received a response. Okay, and it was comprehensive. Usually it doesn't happen. I've asked lots of questions online and rarely get a response. Thanks. Best wishes from Jennifer. So I'll take you guys back over here. I'm going to actually hop on here and answer a couple of questions directly for you guys live right now. So bear with me. And again, I'll throw up the address once more. It's TheoTrade.com/blueprint. Just click add to cart. It's $297 tonight. All right. So, somebody was already asking, are there any new classes planned for November or December? Absolutely, unequivocally, yes! There's actually some good stuff. In fact, one of the next ones up is actually a Jeff Bierman class. The Professor is actually slated. But you've also got a class, I believe, from Matt Williamson, our market neutral specialist. He's an options geek extraordinaire. So literally every month we do at least one class. All right, excellent. Let's see. I love this. Walt came in here and said, already a member from the past, but retired now and want to protect against the downside. Walt, absolutely. Shoot me an email anytime. We will definitely be able to walk you through some of that. All right. there was another question, said, are you talking about selling out of the money, okay, verticals, okay? And the answer is yes. So we're going to actually use out of the money verticals to finance the cost of our puts, okay? All right, next one over here. I have an annuity, okay, that's invested in numerous areas. Can I use this formula on it? So, Tom, the answer is yes. I'm guessing that your annuity has what they call a variable annuity. One of the nice areas over here is I know people come from all walks of life and talk about trading, okay? Not only was I in the professional trading world making markets, but I also ran part of a brokerage firm for 15 years, and I'm totally familiar with annuities. At one point in my career, I held a Series 3. I actually held a Series 4, which is an option principle. I was a Series 7, a Series 24, and a Series 66, which is a 63 and a 67 combined. You know what I say about that? You want fries with that? Absolutely. But the bottom line is, Tom, is totally familiar, unfortunately, with even insurance products and annuities. It's painful, yes. So Joan said, how do you do this in 25 shares? So on 25 shares, Joan, instead of actually just buying an outright put, we'll actually use a put spread. It's a little bit different, so we can actually chop it down a little bit. Okay. So oh yeah, by the way, Tim was also asking, do the indicators stop working after 3 months? No. We can't stop you from using your indicators after 3 months. Listen, we don't hide much over here. I don't mind saying this. Listen, if you want to sign up tonight for $297 and you want to download all of our indicators, okay, you can do that. Again, we'll still be friends afterwards, but we have this shared charts, scans, and studies. Just go in there. That's where it's at. It's under member chat room. Okay, shared charts, scans, and studies. And you know what? Even our members will share stuff with you. It's phenomenal. It's a really, really tight-knit group that's in that chat room every day. We got nicknames for everybody. It's good stuff. All right. By the way, keep firing in questions as we're going over here. Oh, by the way, yeah. So somebody was asking about currency products. Yeah, Brandon Chapman is more than versed in talking about currency products. So absolutely, if you want to trade some currencies, we're down with that. By the way, I want to thank a couple of people that are enrolling right now. Anthony from Illinois, William, Nebraska. Okay. And I don't want to butcher this name, Alka from Illinois, Gary from Utah. I'm reading a couple of them. I'll come back to a few of them in a moment and answer a few more questions on the way over here. So again, it's 3 months, and I want to make this clear because I'm reading some of the questions that are popping in right now. Somebody said, can I use this? Can I use the Atomic Hedge if you don't have a portfolio? Well, if you don't have a portfolio, okay, I'm actually going to suggest another strategy. It's not dissimilar to the Atomic Hedge, okay, but it assumes that you do not own the stock. It assumes you don't own the stock. And that's, I think, of, critical importance. If you don't own stock tonight, I get it. And we can also help there as well. So it looks like I got almost all of them. I want to thank everybody that is enrolling right now. And please, if you have questions, we'll stay on. Also, the best way to get a hold of us right here, right now. Okay, if you have questions about the enrollment, just come over here. We are here. Okay, name, email address, start the chat, and we'll chat with you one-to-one. Again, it's TheoTrade.com/blueprint. I also ask you, hey, enroll tonight. If you have the time tomorrow morning, right when the bell goes off, feel free, chat in, okay? Hey, I'm brand new to TheoTrade, and we'll welcome you guys. It'll be phenomenal. Thanks, everybody, for joining us here this evening. Hope you guys enjoyed it. Have a wonderful night. Bye-bye.